6 weeks ago, SpaceX stock traded at $225 a share. Today, it is near $116. That is nearly half the value gone in 6 weeks. And here is the strange part. Nothing about the company actually broke. No failed launch. No missed earnings. No scandal, no downgrade, no lost contract. The story you were sold in June is the exact same story today. So why did the price collapse? And is $116 finally the bargain everyone is calling it? Let me be clear about what this is. This is not a video about SpaceX being a bad company. It is the rare business that partly deserves its hype. The question was never whether the company is good. The question is whether 116 is a good price, and whether right now is a good moment. And there is a calendar that answers that second question far better than any chart can. Almost nobody buying this dip is even reading that calendar. So let us walk the 6-week timeline. June 12th. The offering priced at $135 a share. That is the price the banks paid and the price you kept hearing on television. But you could not buy at $135. Nobody outside the deal could. When trading actually opened, the first public price was $150. $15 a share of guaranteed gain already handed out before you could ever click buy. It closed that first day at $161, 19% above the offer. Every headline called that number proof of demand. 4 trading days later, on June 16th, it touched $225.64. That was the top. Nobody rang a bell. Then it slid, under the offer price by mid-July, under 110 last week, down 48% from a peak set 5 weeks earlier. And I want you to sit with this. The business on the day of the peak were completely identical. So let us actually price the thing. What exactly does $116 buy you today? At today's price, the entire company is valued at roughly $1.5 trillion. Last year, that entire company sold $18.7 billion of product. Divide one by the other, and you get 82. You are paying $82 for every single dollar of annual sales. A normal industrial company trades at 2, maybe 3. At the June peak, this one traded at 158. So yes, it halved. It is still extraordinary. Now for the honest part. Starlink alone brought in $11.4 billion last year, 61% of everything, and earned $4.4 billion in profit. So the satellite internet business works. It genuinely prints money. But the company as a whole still lost $4.9 billion last year. The artificial intelligence arm burned more than $6 billion and kept burning into this year. You are buying a profitable satellite company welded to a very hungry furnace. But none of that explains the fall, because none of it changed. Here is what actually did. On day 1, only a small slice of the total shares could actually be traded. Everything else was contractually locked. Employees, early investors, and the founder himself. Why can banks sell on day 1? Regular investors are stuck waiting. The plain answer is that a lockup is a private contract, not a law. The banks running the deal write it, and they simply do not sign themselves into it. So the shares they were allocated at $135 are free to sell the moment the market opens. That is not a loophole, that is the design. Which means a tiny available supply met enormous demand, and that is the only reason the price ever reached $225 in the first place. That price was never a judgment about value. It was a symptom of scarcity. And scarcity, unlike value, has an expiry date written into the contract. That expiry date is written into a calendar, and that calendar is the entire answer here. So here is that calendar at last, and why the shape of it is genuinely unusual. Most companies unlock everything on a single day, roughly 6 months after listing. One date, one enormous wave of new sellers, and usually one very ugly week. SpaceX did something different. They staggered the unlock into tranches, spread across an entire year, specifically so no single day would flood the market at once. It sounds considerate. It is actually worse for you as a buyer because it replaces one bad week with roughly 6 months of steady, predictable selling pressure. The first large release began this month. Then smaller tranches land every 2 to 4 weeks, straight through October, each one adding sellers who never had any. The single largest release arrives in late autumn, triggered by the third quarter results. Then December 8th clears out whatever is left of the 6-month block. And the founders' own 6.4 billion shares stay frozen until the 12th of June next year, a full 12 months after the company listed. So the sellable pool keeps growing every month while the buyer pool does not. You are not buying a company yet. You are standing under a scheduled release. And if all of this feels unprecedented, it really is not. This exact pattern has happened again and again. Rivian jumped 29% on its first day and was called the next Tesla. It now trades roughly 78% below the price it listed at. Coinbase opened its first trade at $381 at the very top of the crypto boom. 2 years later, it was worth about $62. Snowflake more than doubled on day one, and then spent the next several years slowly crawling all the way back down to roughly where it started. These were not bad companies. The pattern is that in year one, price is set by who is allowed to sell, not by the business itself. So the answer to should I buy is not yes, and it is not no. It is when. Phase 1 is right now through early December. If you must own it, cap yourself at 1/3 of your intended position and expect it to fall further. Phase 2 begins after December 8th. Watch whether the price stops making new lows. If it absorbs that final unlock without breaking, add the second third. Phase 3 waits all the way until June 12th next year, when the founders' shares unlock. By then, you will have 4 full quarters of real numbers. Buy on those, not on vibes. I do not own this stock, and here is why, plainly. One respected research firm values it at $62. Another sets a target of $800. When professionals disagree by 13 times over, nobody actually knows anything. Size your position that way. So do not time the story. Time the supply. Simple math, boring patience. That is the simple coin.